Hello, and thank you for joining me in another video. And today we've got a very exciting one on Nebius stock. But first, if you're new here, my name's Howard. I've been a retail investor for over 10 years. And this channel is about me sharing my investment research and also what I'm actively investing in. And as I said, today we're talking about Nebius, which is one of the companies I'm most excited about at the moment. And it's one of my biggest holdings. They recently released their Q4 earnings, which had lots of really good updates on it. So today we're going to go through that. I'm going to give you my thoughts and see kind of what we can be excited about in the future for this company. First of all, we're going to have a quick check-in on the small YouTube portfolio that I started last month. Wanted to share this at the moment because we do now have Nebius as my top holding in this portfolio as well. So it's just gone over grab with the recent run that we've had last week. Did actually manage to scoop up a few more shares this week. Really, a really good price after the earnings came out in the after hours. We saw a big dip for some reason, and then obviously I got a few shares then, and that turned out to be a very good buy. So that's where we are on the YouTube portfolio at the moment. Nebius is my second biggest holding, is my biggest holding here, and overall in my main portfolio, Nebius is also my second biggest holding now, I believe, as well. So now let's jump into the actual stock price to see kind of what movement we had this past week. And it was a bit of a choppy week. We had a very choppy week the previous week with the whole market going down. There were some red days this week too. And we actually in the open market went down to as low as $84. Then we had the results came out. We did actually jump again down to around like $84 in the after hours. And then we really recovered that. If we look into Friday, if we just look at Friday yesterday, for example, up 9% on the day. So looks like it took a little bit for the market to digest the earnings that came out from Nebius, because I think they did actually miss on their current revenue. But of course, this company is just all about the guidance and how quickly they can grow and build out their infrastructure for the future. So it seems like it took a while for people to digest that, and then the stock price followed. So now talking about the results. First of all, we'll just have a look at the raw numbers. This is the financial results that they released. They announced in the last quarter, 227 million worth of revenue. It's a huge 547% up year on year. And if we look at the total 2025 numbers as well, 529 million revenue, 479% year on year. So this is growing at ridiculously fast rates. And what we can also see as well, which is good to see, is their adjusted EBITDA actually went positive for the first time, I believe, last quarter. So 15 million in EBITDA. Of course, the net income and kind of from operations is down because we're investing so much at the moment to grow. But this is kind of where we are with actually finally turning positive on our EBITDA. What I was also interested in looking into as well was okay, in this Q4, our revenue was up 547%. But what is good that is, even though our costs are going up, they're not going up as the same rate as our revenue, which is why we're getting this leverage and why we've turned EBITDA positive. We look at our sales, general and administrative, for example, in a quarter where our revenue has grown 547%, our SG&A has only grown 87%. Our product development has only grown 66%. And our cost of revenue's still gone up a lot, 225%, but it's still less than what our revenue is going up, which is really good to see in terms of the company getting operational leverage as it continues to scale. Now we'll go into what I think is probably the most exciting slides, which here is I believe this is the letter to shareholders, they call it. So it's from Arcadi. But this is basically our top line results, kind of our headline results, what we did in this last quarter and also what they're guiding for. If you look at that ARR, which we ended on this year, it's 1.25 billion. I remember when I first invested in Nebius back around halfway through last year. It was the first time they upped their guidance. Well, again, here we can see they upped their guidance to around 900 to 1.1 billion. And again, they've exceeded that towards the end of the year, or they kind of increased their guidance and exceeded that. So it's great to see they are still basically pushing on full steam ahead. Their ARR guidance for year end in 2026. So again, we're at 1.25 billion ARR at the moment. They've still kept their guidance flat on that at 7 billion to 9 billion. I'm completely okay with that. I think some people were hoping that they would raise this guidance. I think we've had a few big raises in guidance. There was a big announcement last quarter about how much they were raising guidance. I do want to see them beating this guidance, and we need to be doing that with a company that's got so much excitement around it in the AI space. But I'm happy for them to keep on executing on this, and then hopefully in Q1, Q2, they might be able to readdress this guidance, maybe change it from 7 to 9 billion to just 9 billion, or maybe even more. So they've kept that guidance firm in terms of what they're looking for in 2026. And they also raised their capacity guidance, so what their guided capacity is going to be for the year end 2026, which is up to 3 gigawatts of power. So at the end of the day, we need their capacity because we need to sell this capacity. We know they sell out of all their capacity as soon as they get it because demand is so high. The faster they can get this new capacity online, the faster they can start selling it. When we talk about this new capacity, we're not just talking about these hyperscalers and massive deals we get. What's actually really important for Nebius is their AI cloud, is to have these businesses come on and not just rent their GPUs, but actually build using Nebius's software on top of their GPUs. So they're using the full stack, the hardware, the software, not just only training their AI models using Nebius's software, but also running their inference on there as well to actually run the models over the long time for their customers. Another exciting thing to see, we can see that their guidance, so at the moment, I believe it's still 7 sites they're operating in. Their guidance for year end 2026 is to have 16 sites. And if we look into here, existing sites in purple, new owned sites in green. So we know we have these, particularly the Missouri one, which I've spoken about. I believe that is going to be their biggest ever site. They're putting it through that planning permission at the moment. They've bought the land for it and they're hoping to start breaking ground on that and start building that around halfway through this year, hopefully. So that's going to be really exciting to track along. And new co-locations as well. So these are locations that Nebius aren't building from scratch themselves, but they're locations that already have the infrastructure set up. Nebius is then taking over or working with the people that own those in order to provide capacity to Nebius's customers. So you've got a couple in Israel, France, I believe this one's in Amsterdam, and also in the UK as well. And we'll also get onto another really nice announcement that we've had as well regarding another location, which has just been announced at the same time as these as well. Q4 group revenue up 547%, as I said. Core AI infrastructure business, 24% adjusted EBITDA margin, positive adjusted EBITDA, so improving efficiency as we grow, which is what I spoke about. The revenues are growing really fast. Costs are growing by not as much as revenue, so that's really good to see. And in a very strong cash position as well. 3.7 billion of cash. What I've also been, a good thing about Nebius as well, they've got these huge deals with Meta and Microsoft. That cash is coming in as well, and they're actually managing to use a lot of the cash from those massive deals to then fund their expansion as well, which is a great benefit that they've got as well. They do have a lot of funding options at the moment, one of which we can see they've got these other investments here. ClickHouse just announced here, reported a valuation of 15 billion in January. I went through this in a previous video as well, so their investments are also going up in value. Some good highlights to take out of this as well. Like what was good to notice is, so we delivered, they promised to, when they signed these big deals, it wasn't just all talk, we've got Microsoft, we've got Meta, is to get them online as quickly as possible. And they have delivered the first tranche of capacity for Microsoft in November 2025. So they've hit their target on there. And we delivered both contracted tranches to Meta on time and now fully in servicing stage. So they're making promises and they're keeping them. And that's the thing that I like about Nebius. When you're looking for a company that you want to see big growth from, it's just executing and executing. And they've got the team and the kind of structure to do that. These guys are making promises and they're keeping them. And they just seem to be growing in all the right directions, just executing and executing. And what I like about Nebius is that they're not just relying on these big customers either. The real special sauce with Nebius is their AI infrastructure software that people can use to develop their products as well. Healthy balance sheet, 3.7 billion of cash, which places us in a great position for the implementation of our 2026 and future growth plans. These huge data centers they're building are going to cost billions and billions of dollars, and they need funding to do that. And they do talk about kind of we've got a disciplined approach to raising capital. We see strong appetite from financing partners and investors, and have a broad range of financing options available, including corporate debt, asset-backed financing, and our unused at-the-market equity program. So they can tap the market when they see fit, but they do have other options to be raising capital as well. And I believe there were one or two. We've got the acquisition of Tably as well, which is really good to see. I did a video on that as well. That looks like it's basically just going to go seamlessly into their AI cloud as well. So that's it on the results. Like, my personal opinion, I'm very, very happy. The revenue doesn't matter too. Like, the revenue's growth is huge, over 500%. It doesn't matter too much. What I want to see is that they're executing and they are growing as quickly as possible, and their guidance is to grow as quickly as possible. They've kept this strong guidance, which hopefully they'll be beating or increasing their guidance in the future. And they've increased their capacity guidance for year-end 26 already. So they really are kind of doing all the right stuff. And then one more thing we can go around here as well. Is they have announced they're building a new data center in France. So 240 megawatt data center. We know one of the kind of the stronger points about Nebius is it does have these footprints inside of Europe. This is good for some places in Europe, or a lot of Europe has kind of compliance with where they can keep and monitor their data. So it really helps get into the European market. And it also helps them just kind of diversify where they're running from as well. So got another announcement here, 240 gigawatts is being built inside. I don't know if we've got an actual date when they expect this to be finished. But we need to be seeing, with the AI world growing so quickly, we just need to see these getting launched, getting built, and then getting serviced as quickly as possible. So they're not taking their foot off on that side of things as well. So that's my kind of overview of the earnings. Again, I'm very, very happy with these. It actually made me more excited about Nebius, just so they seem to just keep on delivering, and it's just looking really exciting about the future. They kind of state again that they do not have the capacity to suit their demands, and when you're growing at 500-something% a year, there's obviously huge demand, and they're rushing to make sure they've got the capacity in place. It looks like they're doing that very well with raising the guidance of their capacity and actively building new data centers, it looks like, as quick as possible. So I'm very happy. I'm going to continue buying into Nebius when I see fit. It's already a big position in my portfolio, but it's an investment that I'm very happy with at the moment. So I will kind of carry on buying as I see fit without getting too carried away with how the market is at the moment. So I hope you found this useful. If you have, please do let me know in the comments, and I'd love to know your thoughts on the earnings as well. And also if you're kind of buying around this time as well, or what your thoughts are on the stock price. And if you're back for another Nebius video, please do subscribe as well, because I'm going to be doing a lot more content on Nebius going forward. So apart from that, thank you for joining me, and I will see you again on the very next video.